Welcome back. Today it was reported existing home sales dropped 4.1%. That's the lowest pace in over 13 years. The housing inventory declines 5.7% on a year over year basis. Median house prices rise 3.4% on a year over year basis as well. Normally, we consider these on a year over year basis, but I think it might be helpful to take a look at just the raw data to understand where the trend is going. The red line indicates the existing home sales. Now, this is the monthly supply. Currently, we're at a 3.6 monthly supply. So it would take 3.6 months to depreciate or to deplete our entire supply. This is actually a rather low supply. We want to see this in the 6 to 7 month area. It's not. We have a low supply in terms of inventory. The purple line is a median sales price in terms of dollars. Now, it is rising on a year-over-year basis. However, the fact of the matter is we can see it is softening a little bit over the past couple of months, but now this doesn't take into consideration seasonal factors, and that's why, oftentimes we'll look at things on a year-over-year basis. But the fact of the matter is, the sales price is not really dropping like we would hope it would. These are the month-over-month numbers. We know the consumer price index was released recently, essentially at zero, just a hair above zero. Now, the single-family homes, the monthly supply, this is on a month-over-month basis, up 5.9%. Now, that is the number of homes available, uh, again, displayed in terms of a monthly supply. That's up. The single-family homes, the housing inventory, that's also up on a month-over-month basis, 2%. Single family sales price, that's fairly negative, really unchanged. The single family homes in terms of the number of units is down 4.2%. Existing home sales monthly supplies of 5.9. And again, the most remarkable number is probably the existing home sales 4.1% to the downside. We're really seeing a slow in the pace. And I think that is probably the biggest takeaway from today's report is a slowing in the pace of the sales, 13-year lows. Housing inventory, that's the number of units, that's in red, that is rising. The existing home sales, that's the number of units are actually being sold, that is declining. So you put to that together, inventory rising, the pace of sales declining, the housing market certainly is showing signs of slowing. Here's a red line medium sales price for a single family home. Now, this is in dollars, just a hair below 400, 390 and change. Now, the single family homes, the number of units being sold, that is certainly declining as well. So you take into consideration the fact that the sales are slowing and that the value of the average home is also slowing. It shows us there's just no demand out there. Typically we'd expect to see if there's not a lot of demand, the prices will come down, but then the velocity, the pace of sales would improve. This purple line we would expect to go up. But the fact of the matter is, the number of units being sold is going down. At the same time, prices are going down also. There's just not a lot of buyers out there. Red line, single family home sales, that's a monthly supply. Again, runs 3.6 months. Single family homes, that's the housing inventory. That's a number of units, around 1 million. So the inventory since March is increasing. Now, again, on a year over year basis, we're talking about different numbers. But just take a look at the pace since February until now. The housing inventory is rising, as is the monthly supply. Again, the story, the takeaway from this, not a lot of demand. Yellow histogram bars here show the federal funds rate. Those are interest rates holding steady at 5.5%. We know the most recent Fed speak has basically shifted the Fed funds futures into a position where we do not expect any more interest rate hikes. Maybe that's good news. As interest rates have risen, the housing inventory, the number of units, is also rising as well. And that's a very logical phenomenon. Higher interest rates dissuade buyers. We just don't want to pay those higher interest rates. Here's Fed funds over the existing home sales, which is declining. Again, not a surprise at all here. Higher interest rates slow down the pace of existing home sales. Here's consumer price index, which was barely in positive territory. Now, this should be a little bit of a relief. This is the reason, that's in yellow. That's the reason why the Federal Reserve is expected not to raise rates. Very simply, inflation has cooled. We're not on a year over year basis. We're not yet at the 2% target, but we're heading in the right direction. And we can see here, as inflation was quite strong in the past, the median sales price, well, inflation, in part measures the price of homes, but then again, inflation also makes it more difficult for us to go out there and buy a house. So ultimately, the higher inflation slowed down sales and has depressed the median sales price. So again, the takeaway from this entire report is that the pace has slowed to a level we haven't seen in over a decade, 13 years or so. Inventories are starting to creep up. I know on a year-over-year basis, it's reported as decline, but they are. The trend is showing us that inventories are rising. We're at a 3.6-month inventory right now. That's certainly not as high as it could be. And at the same time, again, the sales price has been depressed down to, under 400, about $391,000. That's a median sales price. So we certainly are seeing the effects of higher inflation, higher interest rates on the housing market. Not a surprise at all. The real question is, well, the Federal Reserve is expected not to raise rates anymore. The jobs market has slowed. That, we saw that from the last non-farm payroll. Uh, the question really is the housing market, can it just hold in there? Can it not really fall apart? If it really starts to fall apart, then certainly we have other issues to talk about. But it's sitting on shaky ground right now, and certainly it's a cause for concern. We hope this has been helpful. We look forward to seeing you back soon.